G'day folks, welcome back to another update for gold and silver. Now the charts are showing consolidation on both instruments. We'll include some back testing, and before we go any further, make sure you hit that like and subscribe button to support the channel. Also, don't forget to reference the +1 videos, so if you need to understand some of the strategies we're using in a bit more detail, reference these +1 videos, and links are in the description below. Okay, let's get stuck into the outlook. As of today, August 7th, gold, the outlook for gold remains bullish, driven by persistent geopolitical instability, economic uncertainty and strong central bank demand. The recent weak US jobs report has diminished some bearish pressure and heightened expectations for a potential Fed rate cut, which would be a positive for gold. While gold has been in a period of consolidation, trading within a range, it is being supported by flight to safety sentiment as investors seek to hedge against risks such as currency devaluation and inflation. Silver's outlook is also bullish, with potential to outperform gold in the coming months. This is driven by its dual role as both a monetary metal and a high-demand industrial commodity. Industrial demand, particularly from the fast-growing solar and electric vehicle sectors, is creating a supply deficit that is putting structural pressures on prices. Similar to gold, silver is benefiting from the same safe haven drivers, but its industrial applications provide an additional layer of fundamental support. Okay, we always look at the long-term trends to get an understanding of the direction. So on the monthly, you can see here the price is very well established above the moving averages, giving us a nice big bull run. However, notice these fair value gaps down here are identified, and that means these orders haven't been filled. So we possibly may see the price drop to those levels maybe in some time in the future. Again, these are very long-term plays. Don't go placing short orders based on that. I'll look at it more like a support resistance zones more than anything. On the weekly, likewise, it's bullish on the price, but notice the CCI is dropping off. There's no CCI on the monthly, but notice the weekly CCI is declining. Lower highs versus higher highs on the price. That's a bearish divergence. Again, a very long-term play. It's been happening for a couple of years now, and that CCI seems still to be dropping, even though the price is still rising. So again, just be aware, we might see a break to the downside. I've drawn a little target range there of a Fibonacci retracement, and that Fibonacci retracement, for those new to the channel, if I just zoom out for a moment, we take it from that high once that divergence was identified, and we take it back to that low there. That's at 23-38% range. As a minimum, we expect the price to break into that range and then possibly either bounce, or it could of course go a lot lower, and we don't know where that drop or that bottom is. We just anticipate a minimum retrace into that area there. Now, if it does keep falling, then we look at each of these Fibonacci levels. You know, the 50% level there, the 61%, and if it drops below that, that's when we look at these fair value gaps to be penetrated as well, which happen to coincide with this moving average 200 as well. So at the moment, somewhat neutral positioning considering the CCI on the weekly. On the daily, now you can see there very long-term consolidation. Now it's been happening for a few months, versus a slightly declining CCI trend. So at the moment, that's why I've drawn this arrow. Avoid going long or short until we see a decisive break one way or the other. Now it needs to probably break above this resistance to be more bullish, and I'd like to see the CCI also start curving strongly to the upside like it did back here. That's what you want to see. You want to see both price and CCI moving averages trending and moving higher and expanding like they did back here. Once you start seeing this sort of movement, it's a bit hard to gauge, especially when you see a bearish divergence like we did back here. So at the moment, that CCI seems to be dropping, even though it's making a few false breaks above, versus similarly a consolidation of price. So at the moment on the daily, it's neutral, so avoid going long or short. We look at the 1 hour time frame as well. So if you're trading on the 1 hour, you look at the daily. And as I said, on the daily, you could possibly take some of these trades when the CCI and the price break above, like some of these periods back here. But again, just to be safe, if depending on, you've got to watch these very carefully. You'll notice here the price is still consolidating on the 1 hour, and so is the CCI, and it's somewhat dropping, so we might see a pullback. Again, notice here we've got a fair value gap. I'll mark that. And we might see the price break down to that range in the near term to fill those orders. You can see these other fair value gaps are all filled with the subsequent candles back here. This one back here was filled with 3/4 of that price movement back there. So again, if this starts breaking to the downside, we expect the price to come back into this range at some point. Now, in terms of trading, direction of trade, as I said, at the moment I would not be going long or short. If I go back to the long-term trends, So you can see here currently on the daily we're going sideways. So what you want to do is you want to make sure you're going long. So back here, for example, you could have gone long if you see the price moving in the same direction as the CCI. So back here, for example, and that was around about the 10th of February. That was back in this period on the daily. When you see those little breaks on the weekly, that's where you would have started going long on the daily during that, when the price and the CCI moving averages are in alignment, moving higher. Next, looking at silver on the long-term trends first on the monthly. Again, bullish momentum on the price chart. Likewise on the CCI above the moving averages. So bullish momentum on the monthly. However, notice on the weekly, and notice back here as well, we've got these fair value gaps. Shorter term, this area here. So just be aware of that. And longer term, we've got this fair value gap down there as a potential area. And that also is in accordance with this support level at 26.13. On the weekly, we've got a declining CCI versus higher highs on the price. Now that was a bearish divergence. You can see there it broke down into our 23-38% range there, and it finally broke higher. Now, but also notice the CCI is still somewhat declining. We had a bit of a bullish move back here when the CCI broke higher. And again, you notice here on the daily, if you're trading on the daily, you would have gone long during that period when both the price and the CCI were in alignment. And you'd be not in any trade at the moment, because if you're trading on the daily, because the price is bullish, but the CCI is somewhat neutral. It's in that moving average range. For this to be bearish, I'd like to see both the CCI and the price break below these moving averages, and the moving averages to start bending down. So even though back here it was bending down on the CCI, notice the price moving averages were still trending upwards. On the daily, here we had a bearish divergence, lower highs on the CCI versus higher highs on the price. I drew a Fibonacci target there that broke down and hit the target before our last video. And since then, it's actually bounced from that period and it's filled this fair value gap. We've got a bit of fair value gap up here which hasn't been filled yet. So we might see further upside possibly. Again, notice these fair value gaps here that haven't been filled. So just be aware of those. So this could go either way at the moment. So at the moment on the daily, it's somewhat neutral. The CCI is in that moving average range. If this breaks lower and the CCI breaks below, you start taking short trades again. So looking at the 1 hour time period, again, I've drawn this arrow here going short based on the price and the CCI breaking below the moving averages. That's where you would have gone short, equivalent to this area on the 1 hour time period. You would have taken short positions there. I'll show you the back test in a moment. But first, you'll notice here that the CCI and the price started bouncing higher. The moving averages started curving up, and you would have closed out your short. If you're going short here, you would have closed out your short position on that candle there and maximize your return, and avoid going long or short at the moment. Even though the 1 hour looks promising, always wait for the daily also to show alignment in the direction of the trend. Otherwise, this could be a little bit of a false break, and you don't want to get caught into it and then get caught with a sudden move to the downside. Now, in terms of a back test, again here looking at the short positions based on the daily direction, you would have taken that short position there, both the stop loss approach here and the average down approach. And as I said, you would have closed it out the very latest on that candle. At that point there, so that point there, the stop loss approach was generating about 6,500 in return, and the average down was returning about 8,900. Again, you would have avoided going short during this period, so just ignore those periods there. Wait for this on the daily to start turning down on the CCI. The price is just below it, so it might start turning down as well to fill that fair value gap, in which case you wait for the hourly also to be in a bearish momentum on both the price and the CCI to take short trades. Again, don't forget to hit that like and subscribe button to support the channel, but also reference the +1 videos to get a better understanding of our trading strategies. Thanks, and see you in our next video.